Okay, good morning, folks, and welcome to a quick morning update for February the 20th. It's about 4:25 in the a.m. The chart that you're looking at right now is a 4-hour chart of the ES mini futures. When I went to bed, we were holding on to this 20-period moving average pretty well, but we have since broken down below it. We are now trading down about a half percentage point, 13.50%. We just ticked up. And now down. The mid caps, same deal here. We have not broken down below the prior period's lows, so we're holding support. The Dow futures, very similar to the S&P 500 futures, except on a percentage basis, we are down lower, and we have undercut the prior period's lows. So some pretty significant weakness going on here. Let's take a look at the bond market. Here is the 10-year note. I think we're setting up here for potentially a rally. Let's throw some lines up here, and I'll explain to you what I mean by that. Okay, so for a moment, let's pull back. Let's go to a daily chart. And you can see that there's all sorts of ugly going on here on a daily basis, weekly basis, same deal. Now, when you drill down to a 4-hour chart, and obviously the weekly chart's going to take precedence over the daily chart, the daily chart precedence over the 4-hour chart. But when you take a look at this chart, we pulled back last Wednesday. Thursday, we consolidated and then began to rally. Friday, that rally continued. Since late Friday afternoon, we've pulled back in an orderly bull flag formation. We are now holding the lower band of support. So this means nothing in and of itself, unless, of course, one of two things happens or both. One, we break out above this upper band of resistance in yellow and we close there, and then we need to take out Friday's highs. Two, we'll get a pullback to retest this lower band of support, the prior low, and that would coincide with this lower band of support as well. So the jury's out, but if we rally here, that means that yields will be dropping. And then you have to ask yourself the question, why are yields dropping? Is there anticipation of the Federal Reserve not doing something? I don't know. But the problem for the markets is this, is that there isn't much in terms of economic data coming out this week. We have the PMI numbers coming out tomorrow for manufacturing and services. But what I really believe the markets are waiting for are the Federal Reserve minutes set to be released tomorrow, the 21st. Now, what will be interesting is if we get a weak read on PMI and the minutes come in dovish, that'll send the dollar, which is behaving really well today, a lot lower. But as it stands right now, it is in fuego, no doubt about it. Putting in higher highs, retesting resistance. Let's take a look at gold. Gold is in a world of hurt this morning. It broke down below key support on Monday, following through to the downside today. We're down 1.24% as it stands right now, so not good. Let's check out oil. Oil prices are holding firm. Bitcoin, a huge run up here, up over 12%. On this 4-hour period, we're now flashing a bearish key reversal after putting in a doji star formation the last period. Let's go to a daily chart. I think we have a little bit of upside room to go here. We have real stiff resistance at, let's call it 11,765 on Bitcoin. Then you're going to see it tested. Members, let's now segue into your stock chart request. For non-members, this is where I review the symbols that our gold members submit for me to review on video. Let's get to it. Okay, folks, so let's segue now into member stock chart request. This is where we review the symbols that our members submit for me to review. Let's begin with Costco, one of my favorite retailers. Costco has seen some volatile times these past several weeks. We had broken out above resistance, consolidated, broke out once again. That breakout failed, and we rolled back over, took out not only the support level here, the breakout point, but also took out the lower band of support, and it closed there. However, we did not make a continuation breakdown, and last week we reversed to close back above the upper band of resistance. So what's the play here? I like Costco. if there's one retailer that I wouldn't mind owning, it's Costco. So while I wouldn't go jumping in with both feet to the long side at the open, what I would look to do is ensure that we were going to close above this upper band of resistance at least through Tuesday, open up a position, hopefully on a retest of the support level, and then look to add more as we begin to break out above 199.35, and most importantly, a close above that level. As I always like to tell members, it doesn't matter where a stock trades intraday or intra-week, depending upon the time frame of the chart that you're using. What matters is where it appears to be poised to close. So we want to close the week out primarily, number one, definitely above this upper band of resistance here, now support, and two, above 199.35 before we went all in on Costco daily chart. Now, on a daily basis, a bit of a concern here. We had a huge rally, which began here, actually here, if you really want to define the bottom here, it was on the 6th, where we bottomed out at 184.52. We rallied, then pulled back. We retested the prior low on the 9th, and then we began a rally up and through last Friday. The problem here is that we reversed. While we still closed positive on the day, this is a very bearish day. We closed well off the highs of the day. What this candlestick tells you is that you have buyers back here who just, they bought at the top, and it's the same old story constantly. People buy at the top, they get hurt in a quick sell-off, the shares rally back. What's the first thing that those buyers back here do? They sell. They're not looking to make money. They're looking to get their money back. That's it. So they're selling strength. The probability of us pulling back early this week is quite high. So I would be watching, back to the weekly chart, this lower band of support as a good entry point to open up my position. The price is at around 190.25.50, thereabouts. Volume last week on a weekly basis was very light for a week where we were up, back to the daily chart, so strong on the week. So watch out for your volume. Yeah, volume very, very light. So be careful here. Don't get overly weight of Costco simply because it's back above its breakout point. We're going to get a pullback here in all probability. Let's see whether or not this weekly support holds. If you buy it at the support level, use a stop right down below it. Ultimate oscillator, we're putting in lower highs. Just be careful here. I don't think we're out of the woods yet. I think we're still going to see some volatility on Costco. UNG, the U.S. Natural Gas ETF, weekly chart. A lot of damage done here. We had a real serious breakout several weeks ago, and that breakout has since failed. We broke out the week of January the 22nd. The following week, a bearish key reversal, a breakout point failure, or a bull trap, whatever you want to call it. Long story short, this is very, very bad what has occurred here. Now we are trading down below key support level. Last week, we flashed a bearish key reversal on the week. Volume is well above average. You can't buy these shares right now. The only thing that I see as a positive for UNG right now is that your RSI really hasn't broken back down dramatically. We are still putting in higher lows. That's about it. Daily chart. So on daily chart, we have the potential for a double bottom setup forming here on RSI. Stochastics, don't let your eyes fool you. I drew this blue line here. So what I'm looking for is a double bottom setup. And a lot of you out there who trade the stochastics may be saying, what are you talking about? Who's this guy talking about double bottom setup on a stochastic? Trust me, it happens more often than not. You get a double bottom setup, and then you want to buy your breakout. You saw a double bottom setup back here. You saw it back here, a bit sloppy. Back here, expect it again. We are struggling to try to clear $22 per share. I don't think it's going to hold. I think we're going to pull back further here. Next support level is, let's call it 21.25. serious support is between 21 and 20.50 per share. I see no reason to go rushing in to buy the shares of UNG. Volume to the downside is dropping off. I see no rush here. Now, if we rally up and through $22 per share and close there, that would be interesting. If we drop down dramatically and then we flash a bullish key reversal, that would be interesting. Right now, this lethargic trade, this directionless trade is not awe-inspiring. I would avoid it like the plague. Let the shares come to you. Either let them gain strength and show that they have institutional support, or allow them to drift back down to support levels and then speculate down there. That way, you can put your stop loss right below a known support level. Buying right here simply doesn't make sense. Nova Measuring Instruments, never heard of it. NVMI, the symbol. So we peaked out on NVMI back here in November, the week of November the 20th. And we have been putting in lower highs and lower lows ever since. The past 2 weeks, we've seen some good price action on volume. So you have institutions that are nibbling here. Now, a couple of things concern me. One is that we could not close at the highs of the week last week. Why couldn't we do so? Buyers back here and back here, they're selling strength. The indicators are beginning to improve some, but I wouldn't be a buyer of NVMI until either A, we pulled back to the support level and retested with a stop right below it, or B, we broke out above this upper band of resistance in dotted blue. Then we add more on a breakout, and I would keep that initial buy very small because you have resistance right above. And if you really wanted to play a conservative, avoid buying on a breakout above this dotted blue resistance level. Buy on a close above 28.72. Then, if and when we break out above the prior high at 31.88, well, then it's going to be off to the races for NVMI, and you want to add on that breakout. Daily chart. Now, on a daily basis, the daily chart is looking really sloppy. We have a head and shoulders set up, left shoulder, head, right shoulder. Here's your neckline. We retested it only a few days ago. Now, what's concerning to me most here is that we broke out on the 14th. We retested the breakout point on the 15th. However, on Friday, we flashed a bearish key reversal. That is not good. That would imply that we're going to put in lower lows this week. Now, if we gap up this morning and we begin to take out resistance here at 27.81, well then, that breakout point failure has been negated, and I would look to buy, assuming that we break out above 27.81. We must close above that level before I would pull the trigger. Down volume on Friday was very light, extremely light. Now, I like the Stokes here, but normally when Stokes go above 80, you'll get a pullback, and then if the stock is really healthy, it'll put in a higher low and he'll loop back up, much as it did back here, then again here, did it here, rolled over, then it looped back up. You guys that trade the Stokes know exactly what I mean. Back here, that's what we're looking for. So NVMI is a watch. The next chart up, Edward Life Sciences Corp. RSI jumps out at me, higher lows. It's been putting in higher highs, and I think we're poised to break out here. The sector is strong. Price action, higher lows, higher highs, bullish key reversal last week. I would be okay with buying on a new weekly high, small position, and then adding more aggressively on a breakout and a close above 138.48 on a weekly basis. Volume last week, a bit light. You're going to want to see those volume bars rise on a breakout. Stokes, higher lows, looking good. Daily chart. All right, so on a daily basis, we're having a bit of a tug of war go on here. If you're a disciplined momentum trader and you're going to use a stop, a really tight stop, especially on a breakdown below 130, I'd be okay with buying on a new weekly breakout. You have both lines on Stokes trading back above 50 once again. Good stuff. So it's all about the price and volume here. So be careful. I would make sure that I would not be long of these shares on a breakdown below last Friday's lows, because that would drop you back down into this trading range. And again, that's a breakout point failure or a bull trap. Call it cupcakes, whatever it is, whatever you want to call it. If we fail to hold this breakout point, it's going to get very, very ugly. But I think that the shares will probably do well. I think in all probability, we are going to break out in the coming days. If we pull back and retest and close above 130, good stuff. That's a great risk-reward entry point. Use a stop right below the day's lows. So that would be the play for EW. Next chart up, BGCP Partners. NASDAQ stock, weekly basis. We have a problem here in that we broke down below key support. So I can't buy these shares until either A, we manage to recapture this current resistance level at 1450, or we pull down to $12 to $12.25 per share and retest this support level and use a stop right below that support level. Now, last week, we did rally. However, sellers moved in and took us off the highs of the week. That's not good if you're long or if you're looking to get long, because what is the market telling you? What the market is telling you, the market's very smart, it's very kind many times, and it sends you signals. All you need to do is take a look at a chart and observe the signals the market is sending you and don't ignore them. Because what the market said to you is that buyers back here are selling into strength, as represented by this wick, shadow, whatever you want to call it, daily chart. All right, so on a daily basis, we have problems here. Let's throw some lines up. Okay, so here we have a head and shoulders setup, left shoulder, head, right shoulder. We have obviously broken the neckline. We've pulled back. We were leaning into the third standard deviation Bollinger Band, and we managed to consolidate sideways, alleviating that oversold condition. We attempted to rally last Thursday, and that rally obviously failed. And you may be saying, Bob, it closed up. What are you talking about? Well, this is what you call a hollow-filled candlestick. Never, ever good when you want the stock to go higher. It's a sign of indecision. So we consolidated here. We rallied. And what happened is that sellers who bought here, they sold. They want out. They got made whole. They want out. So when would I buy these shares? I would have to wait until we rally back to recapture this support level here at let's call it 1460, 1470 per share. If we fail to hold this support level, I would be a buyer on a successful retest of $12 per share with a stop right below it, because if that breaks, we're going down to 1184. That's how I would play it. This is not a stock that is doing well. It's putting in lower highs and lower lows. And I think that if we break down below 1325, you're going to see shorts leaning to the shares. So if you're long and you're looking for a stop, 1325 would have me out of the position. And that's it, folks. Members, I'll be in the forum tonight if you have any questions. And everybody have a profitable trading day. Be well.